What's going on, everybody? Subpar Investing here. Today I'm going to talk about how you can make your own stock watch list. So we're going to be going into our Robinhood account that we're going to be trading $20 a day on. We're going to be picking individual stocks, and basically I'm going to go through the process of what kind of things you should look for so you could actually fill up your watch list in a more thoughtful way, so you don't just add a bunch of random stocks that maybe you'll never even buy, or maybe it will take a long time for you to actually buy. So without further ado, let's hop into it. So basically, here I have our Robinhood account. It's got $20 added on it, but if we check this out, we have our watch list and it's completely clear. Our watch list has nothing on it. So first things first, I'm going to create a watch list. Let's just say stocks. All right, we're going to create that list. Now, in order for us to actually fill this list up, I'm going to have to go through some stocks that I think would be close to a price that I would want to buy it at, or stocks that may already be at the price that I want to buy them at. So before I get to an actual stocks, the top 3 things I would actually want on my watch list, or maybe top 4 things, would be the S&P 500. So we've got the SPY here, the SPDR, S&P 500 ETF, and I want to add this to my watch list. This is just so I can pay attention to the overall market. The next thing is the QQQ, which is the NASDAQ. These are all the tech stocks. I want to also keep an eye on this. The next thing, IWM. This is all small cap stocks. I want to keep an eye on this, okay? So next is going to be EFA. That is international stocks. This one's the iShares one. All right, and I'm going to add that to my list. And last but not least, I want to add the bonds market. So the one I like to look at is HYG, which is high yield corporate bonds. This is something that you can look at basically to see where the smart guys are putting their money, the big boys, because the big boys usually buy and sell bonds. Sometimes they sell off or buy into them earlier than the actual stock market reacts. So this one's a good one to keep on the list. All right, so we have our SPY, QQQ, IWM, EFA, and HYG. On to actual stocks though. I want to start looking for stocks that I feel I know the business, know what they're selling, know that they have some growth, and I would want them to have a competitive advantage in their sector. So a couple ones that I already have on my watch list, I can just start going through them now. Now, one of the ones that have been probably not my all-time favorite, but definitely one that I've had my eye on would be Google. I want to actually see if it's at a value that I want to buy it at. Currently, right now, I know that it's not at a value that I would personally buy, but in order to look through and evaluate it, I go to one of the first websites that I use constantly, QuickFS, and I search the ticker symbol Google, and here I can look at their financial statements. So some of the important metrics that I look at, first of all, price to earnings ratio. Price to earnings ratio historically sticks to around 15, and over the past several years it has been drastically overvalued, the overall stock market. So seeing stocks at well above 15 PE is not uncommon nowadays, but there have to be reasons that you would actually buy at those kinds of high valuations. Usually, it's when a company has high return on invested capital, ROIC, which basically means every single dollar that they put back into their company, that's the percentage that they're getting back per year, which anything over 10% is generally very good. And as you can see here, Google's 10-year median is 16.1%. And on this chart, you can see it's had some spikes as well, 2021, and still way above its average in 2022. I can also see what their 10-year revenue growth is, 19.9% over the past 10 years, and their earnings per share growth. So these are all things that I can look at to see whether the company is doing very well or not. Now, I do like these numbers, okay? But that doesn't mean I'm going to just flat out buy the stock. Now, a couple of the other websites that I like using, Dataroma.com. This is a very useful website to see where huge investors like hedge funds and big investors like Warren Buffett, Michael Burry, this is a website that every single time they file what trades they've made over the quarter, they'll be updated on here. You can also see what a lot of the stocks for the past quarter were bought. And as you can see here, Google is actually the number one top buy last quarter by percentage and by quantity. So if we're looking at Google, and I want to see just about how many people own it, for example, here's a list of all the people that own it out of the big hedge funds and investors, big institutional investors. And if I click activity, I can see quarter by quarter what's been happening. So here I can see last quarter, quarter one, we had a lot of investors add to their positions, but we've had a decent amount also reduce their positions, some even selling out completely. So this can give some sort of idea whether the stock is overvalued, undervalued, or possibly if there may be some issues going on with the stock. Because, for example, if Google had all sells and a bunch of institutional investors completely selling out of their position, you could probably figure out that there might be some issues with the company. But something like Google, definitely no issues that I have seen personally. Another interesting website that I like using is macrotrends.net. And I can go in here and I can type in the ticker symbol Google. I can go to revenue, and basically I can get a nice visual representation of what's been happening with the company. So here's the year over year growth, the numbers. Here's the revenue. Here's the quarterly, trailing 12 months, year over year quarterly growth. So as you can see, it has fallen a bit. You can also get into financial statements. Macro Trends is the only website that I found where you could do it for free and get such in-depth information about the company. A lot of websites that do post financial statements like this where it's easy to read, they typically charge money. But here I can get a general idea. Let's just say over the past 10 years. So here's 2022. I can look over at 2012. So if I look right here, the revenue is 46 billion and it's gone with a steady increase all the way up to 2022 to 282 billion. I can also look at what their gross profit is too and see that it's raising pretty steadily as well. There's operating income, pre-tax income, and then the one that you probably want to look at when comparing to actual revenue, which is net income, which is after taxes and everything. That's how much they're bringing home. So here, if I look at these numbers, there's a steady growth, no real issues. Here are a couple hiccups, which it could be possible that they were making investments and whatnot, maybe acquisitions, and that's why this net income dropped a little bit. But overall, it looks like they're having a steady growth with a little fall off here recently. Now, another thing I like to look at on these statements is shares outstanding. Now, shares outstanding is basically how many shares there are public. So if I look back here in 2012, there were 13.3 billion shares available. Now, the company can either make more shares like out of thin air, and they can sell it to the market if they need to raise capital, which usually smaller companies, they do this often because they either take on debt or they can create new shares and sell them to the market, which ultimately for you as the investor is not the best, because that means that the share price goes down. But companies can also buy back their shares, which is really good for you as an investor because ultimately the price of your shares will go up. Now, if I look over the past 10 years, there have been some times where Google did issue shares, but overall, over the past, let's say 5 years, they've been buying back shares, which this is good because now that they've gone through their hyper growth and everything, which they honestly are still hitting some pretty good growth numbers. Now I like to see that they're consistently buying back shares, which is good because now they're bringing up their earnings per share, because if they were to make the same exact amount of money, but compared to a year before, they have a lot less shares outstanding, meaning they bought back a bunch of shares and basically deleted them, your earnings per share will actually go up, which means that now your stock, if it stays the same price, theoretically, you're actually making more money per share compared to a year ago. So if you can see here, there was 14.5 billion shares outstanding, and 2022, there were 14 billion shares outstanding. Now, from the net income, you can see there was quite a big drop, but in earnings per share, the drop wasn't as significant as the net income drop because there was about a 3% lower amount of shares outstanding. So I know this is a lot of information maybe for newer investors, but all of this information, little by little, you can store, and eventually it'll be very easy to understand. And since I'm making this video basically as a little bit of an introduction for the whole $20 a day series that I'm going to be doing with Robinhood, I'm not going to waste too much time looking through a bunch of different stocks, because it does definitely take some time to go through and actually figure out where there are companies that may be undervalued and everything. It does take time. And just a quick note, if you do want to do that on your own, one of the nice features of macro trends is that you can press this stock research and you can look for companies through every single industry, every single sector. You can actually find a bunch of companies that may not be popular at all, but you could filter through all of these companies and see whether or not you would want to buy a company. Now, if I go back right here to Stock Screener, and this is all free on Macro Trends, which is what I like, you can actually go through here. You can pick what market cap you want. Basically, market cap is the price of a company. So for example, Apple is the most expensive company in the world right now with a $2.85 trillion market cap. That's basically, if you were to buy the company and every single share that's out there, you would pay $2.85 trillion. Now, you can basically not even touch these, but if you're looking for a smaller company, maybe you don't want to look at the larger companies and you don't want to look at the extremely tiny companies, you could put a minimum of, let's say, 500 million and a maximum of 100 billion. So just by doing that, we already brought down the amount of companies to 2,800. So you can also do things like figure out what price to earnings ratio you want. So if we put a minimum of, let's just say 5 and a maximum of 20, now we only have 1,200 companies that we can look through. Now you can even look for companies that give a dividend. So this makes the whole search narrow down even more. Now I myself, I do love dividend paying companies, but at the moment, I don't really care if they're paying a dividend or not. I want the company to actually be growing, and I want them to be bringing in constant growth, constant cash flow, and for them to be well priced for me to actually buy them. Now, if we jump back to Webull, I've got some companies that I have been keeping an eye out on, and I'm just going to go through them quickly because this is, like I said, a little bit of an introduction video to the whole $20 a day Robinhood investing series. So one of the companies that I really like is PayPal. Now, I've already found a price that I would want to buy PayPal at, which if it gets to that price, full disclosure, I'm buying it. Possibly, you should not buy anything just because I'm buying it. I'm just going to put out my process of me buying and selling stocks, and you can just watch and see if it's something that interests you to ever maybe get into something like this. But the price that I'm looking to buy PayPal is basically anything under $60, which depending on how the growth goes could be a good price. But if the growth does not go as well as I'm hoping it does, $60 may be a bit too expensive. If growth does not go as well, maybe around $30 or $40 would be a good price. So now that I figured out that PayPal is near my buying price, I'm going to go over here to Robinhood. I'm going to put in PayPal and I'm going to add it to my list. The only reason I'm not trying to get this crazy watch list of like 100 stocks that may or may not be anywhere near my buying price, or maybe I don't even have a buying price, is so that when I open up my phone and try to figure out during the day or whenever, when I'm going to invest that $20 every day, I want to see just a select number of stocks that I already know are near my buying price, or they're at my buying price or under, so that I can just go in, see it, and buy it. That's it. I don't need to waste any more time. I don't need to scroll through hundreds of companies and see everything like that. So now that I have PayPal on my list, next company that I've been looking at is Alibaba. Alibaba is another one that's really close to my buying price. So I'm going to go over here and type in Baba, add that to my watch list. Boom, done. Next, I'm going to add, I might as well add Google because Google may just fall down to the price that I'm going to buy it at. So I might as well add it to my list. It's not too far off of what I want to buy it at. Next, after that, I'll throw in Intel, INTC. Next, T. Rowe Price, add that to my watch list. Next, Disney, DIS, add that to my watch list. Next, Bank of America, BAC, Add that one and a couple more. Triple M, I'm not too excited about, but it is one that is on my watch list. If it does get to a certain price, I am willing to buy it, just because on a contrarian point of view, it may be a good short-term play, but I'm not 100% sure yet, because 3M does have some issues going on with lawsuits and things like that. So there is potential that they could go bankrupt. I haven't done very deep research in the company, but it was one of my favorite companies for my dividend portfolio a while back. And now for the last one that I would like to throw in, it's actually AZO, AutoZone. This one's probably not very popular, but as you can see here, from 1991, this stock has been just pumping up in price. And this is basically because this company, this stock is what's called a low beta stock. So it does not really go up that crazy when the market is going up, but when the market falls, this stock actually doesn't fall very much. And as we're in a little bit of a sticky situation in the market, with the market potentially going down over the next several years, this is a company that I would be willing to buy, maybe a little bit cheaper than what it's at right now, just because that I know something like AutoZone, even during a recession, will do very well, and their earnings would not drop very much at all. So I'm going to add that one as my final one to my watch list. All right. Now, if I go right back to my portfolio, I see that I have $20 here. That's going to be for Monday. It's going to be ready to send into one of the stocks that I feel may be the cheapest at the moment. But now that I have my watch list here, now I don't need to scroll through hundreds of companies. I have the companies that I have, and I don't have to waste my time scrolling through hundreds of companies, because my time is precious. I don't need to be sitting here extra on my phone looking through a bunch of companies and whatnot, and then just wasting my time, when I could just have several select companies that are close to a good value to buy at, and I can just go in within 5 minutes, make my purchase, and log out. And that's all I have to do. Anyways, that's basically it for today. I'm not going to go too much in depth on a lot of the stock analysis or anything like that, but I just wanted to give a little bit of an intro on how I look through companies and see which companies may be of value for me to buy, and just a little bit of the process. So check these websites out that I showed you, and you can figure out your own system to find good valued companies so that you can maybe even purchase something as well. So on that note, thank you for watching. I hope to see you on the $20 a day Robinhood series. It's going to be really fun buying individual stocks. We'll see how we can get the portfolio up. Please make sure you hit the subscribe button, like the video, shoot me a comment down below if there's anything that you want me to go in depth about, and I hope you have a great day.